Nvidia hitting an all-time high this week. What does the chipmaker have to do to continue to move higher? Meta signaling huge moves over at the company, making acquisitions, making hiring, poaching employees away from some of the leading AI firms. What that means for Meta and the entire AI industry. Tesla launching its Robotaxis this week in Austin, Texas, but it didn't launch the stock higher. We'll discuss that, and also late breaking news into the channel. Those Trump tariffs, they could be creating more problems, more turbulence in the market, but we'll kick things off like we always do with Meta Platforms. Started the week at 683, and the market is rewarding companies inside of tech that are being very, very aggressive. And we'll talk about that when we get to Apple. Will they increase their aggression? Will Google, will some of these other companies see what happened to Meta as it saw its shares rise 7.4%? This is after just the past month. Shares are up 15%. We're approaching an all-time high on Meta as shares closed the week close to 733. Now, as I said at the jump, markets were up. Everybody was not worrying about a darn thing going into the weekend, and then President Trump had a press conference and he got the mouth running. And it relates to FAANG a little bit as it relates to a digital service tax that is being leveraged on United States tech companies like Meta, like Google, and others. I believe this is a 2% kind of digital tax on these companies as they serve customers inside of Canada. Trump saying that he's going to end all trade talks and within 7 days going to announce the tariff rate that Canada is going to have to pay. Is this a further escalation? Will this lead to other complications? And will this create pullbacks in this market? We saw what you should do in April, and if it does it again, you probably know what to do. Meta being meta aggressive, hiring employees at other AI firms as the AI race races towards super intelligence. The rumors are that OpenAI's next release of ChatGPT, which I think they're going to be calling ChatGPT 5, is going to be off the charts. It's going to be a step forward because this is what we were anticipating when you moved away from Hopper into Blackwell. Blackwell was leaps and bounds ahead of Hopper, and OpenAI has had access to Blackwell probably for longer than any of these other major AI firms. And so we are anticipating their next release to probably be a step forward, whether you call it AGI, superintelligence, whatever you want to call it. The rumors are that OpenAI has something cooking and it's going to be very, very good. Now, that is leading other tech companies like Meta to say, wow, we better get our act together. Otherwise, a company like OpenAI might take all of this business, might leap well out in front among the technology companies. And so Meta not taking this sitting down, they're poaching OpenAI researchers. They did an acqui-hire last week for Scale AI. And the news is this was a top researcher at OpenAI, one of the top employees at the company. So Mark is making a compelling pitch. He's also throwing boatloads of money at this type of thing. And that is very, very exciting for technology. The more these companies spend, the more they compete, the more and more opportunity it creates for investors like you and me. Meta not just poaching OpenAI researchers, but also going on a buying spree, looking to acquire a company called Play AI, a voice AI startup out here in California. This all comes as there are rumors that Meta might be moving away from their open source llama models. If you're not familiar, the company has been spending tons and tons of money training models, and then they release them out into public in open source. Now, it's been great for the open source community as it relates to large language models, but there were a story maybe a few weeks ago where we talked about here on the channel, we were expecting a new larger model, the behemoth, I think they called it at Meta, one of their biggest models of all time, but that actually got delayed. And my information is telling me that Mark Zuckerberg very frustrated with not only the delays, but also the performance of the models. And it has him obviously on an acquisition hiring spree, on a poaching of employee spree, and Meta's got their act in gear. As slow as Apple has moved, Meta has turned it into high gear. In the short term, they're being rewarded by shareholders by seeing their shares push to an all-time high. We'll see a couple quarters from now if they don't produce results. We'll see if Wall Street continues to praise them. Now, something that has broader implications not only on Meta, but other companies as well, is a top court in the great country of Brazil ruled that social media platforms like Instagram, Facebook, and potentially X as well will bear liability for users' posts. So my guess is if this law holds, you're not going to be able to say a whole lot in Brazil. Now, all of this comes as AI and these data centers are just drawing more and more power, and we're seeing this across the board. These companies continue to shore up clean energy or energy in general, nuclear, natural gas, solar, whatever they can get their hands on to power the AI. Now, moving on to Apple. Start of the week at $200, roughly flat on shares of Apple this week. Now, this news crossed late last week. I can't remember if we included it in the show, but Apple appears to be moving into high gear. A company sitting on $100 billion of cash could easily get access to $100 billion of more cash if it needed to. Looks like the company is toying with the idea of maybe making an acquisition in the AI space, including top AI startup called Perplexity, which is viewed as a Google competitor. Company has discussed this internally, but it appears at the current time maybe not moving to the final stages. Now, there was other technologies, including Thinking Machines Lab, which is led by OpenAI's former chief of technology, Mira Muriati. She left the company just a short time ago, started this new company, and it is already being valued at over $10 billion. Apple meeting with them, including Meta as well, as everybody in Silicon Valley is looking for the top talent in AI as the race is on. Now, 2-nanometer chips. This is the latest technology as it relates to semiconductors. This is going to come next year for both Qualcomm, which powers a lot of Android phones, but also Apple as well. Formula One in the news this week as Apple launched, I believe, a well-received or a well-publicized movie starring Brad Pitt. Company partnering potentially with Formula One, the actual racing of the cars, not just in theatrical form, potentially putting cameras on the cars. Moving on to Amazon, start of the week at 208. Bam! Up 7% on Amazon this week to finish the week at 223. We're still off the highs, the 52-week highs of 242. It looks like that's the next stop for Amazon. The other next stop for Amazon is jacking up your Prime fee. And this is what's going to have the stock up 7%, as this is a Costco-like thing. Everybody pays these Prime membership fees that shop on Amazon for an extended period of time. And if you're like me, I don't know how much Prime cost. Amazon could jack up the cost 15, 20, 30, 40%, and I wouldn't even blink. And Amazon continues to add on services for Prime, things like streaming videos, NFL football games, all those types of things. And obviously that costs the company money. And so jacking up the fee on Prime is a great way to flow money down to the bottom line. If the company does that, that would be great for shareholders, although it's probably already being priced into the stock. As we've already discussed on today's show, tech talent is at a premium. I tell you what, if you have any talent in technology and you want to make millions of dollars over the next couple of years, get your resume on LinkedIn because it is bouncing all over the place like a basketball. A key AWS executive is leaving the company to go to another company. And this will be a major story as we move through this year, particularly as we get new models. ChatGPT, eventually Grok. I think Elon Musk was teasing that a new version of Grok is coming here very soon. As these models come out, pushes forward the need for the rest of these companies to play catch up and maintain a leadership position. Now, the company is expanding its delivery network with a $4 billion investment to potentially deliver next day and same day deliveries to 4,000 what we sometimes call rural or smaller towns and communities by the end of this year. I actually own a home in what would be considered kind of a small town or definitely kind of a rural town here in California. Can't get Amazon deliveries to there yet. In fact, there is actually no mail delivery to the actual house. And so it'll be interesting to see if Amazon comes to communities like that, because there are actually a fair amount of people living there. And if you want Amazon packages, that would be pretty amazing. Moving on to Netflix. Start of the week at $1,232 per share. And after my sons have bought Netflix about a month ago, shares have rallied 10%. So both of my sons wanted to announce they're starting a paid newsletter service where they're getting, I'm just kidding. Netflix ended the week up a 7.4% as this stock hit a 52-week high and continues to power higher. As I often note, when we look at the technical segment with Netflix, Netflix is often a leading indicator for the rest of FAANG. That's why I look at it so closely and look at it from a technical perspective. If this thing can continue to power through its 52-week high, it's probably going to drag the rest of these stocks with it. Now, Nielsen data shows that Warner Brother Discovery, which I believe is going through potentially maybe a spin out, saw big gains for its TV viewers, although YouTube, which we'll have more news when we get over to Google, continues to lead in market share as Google continues to invest in the platform. And then you just have the network effect of so many people here on YouTube putting up content. Moving on to Nvidia. Start of the week at 143 and boom, up 10%. Amazon up 7%. Nvidia up 10%. Meta up 7%. No wonder my stock portfolio looks absolutely fantastic at the current time. Nvidia finished the week near a 52-week high of 157. It touched a record high. In fact, it reclaimed the most valuable company title in the world at over $3.8 trillion valuation. The only question is, can it hit $4 trillion by the end of the year? This is as they continue to not sit around and they generate tons of positive cash flow over at Nvidia. What are they going to do it? Some of it is going to be buying back the shares, but the other part is potentially buying other top talent, including this week an AI startup called SentML. Most of these acquisitions that a lot of these companies make, particularly Nvidia, is to bring top talent in. Moving on to Google. Start of the week in 164 and pop. This one got a late day pop. Finished the week up 8%. Finished the week at 178. We're still off the 52-week high on Google at 207. YouTube testing out new AI features here in the United States, including a feature where if you search something like maybe best beaches in Hawaii, in fact, these AI features are really going to apply to shopping and travel. But if I search best beaches in Hawaii, it might do an AI summary and then offer up clips and pieces of videos that might meet my search query. I think this is fantastic. I actually hope it moves to all videos, potentially even the finance space, because it might be that I talk about something in a 20 or 30-minute video. I try to keep these videos under 30 minutes. Maybe I talk about something in this 30-minute video that somebody just doesn't want to sit through the whole thing. They don't even want to go down to the timestamps below, but this AI can pick it out. Maybe somebody gets a 1 or 2 minute clip of what we talk about. I think that's fantastic. YouTube, probably one of the most undervalued subsidiaries in the world, because if it went public in a hot market like we have right now, probably pretty darn close to a Netflix valuation, maybe even higher. This as Google is reportedly cutting their budget in their smart television business and continuing to reinvest in their YouTube team. It's probably a smart decision, as we've seen all the data showing that people are moving much more towards streaming than using televisions. Now, Google's Waymo division continues to partner in Uber in what I will call, and this is no offense to anybody in Atlanta. Atlanta's a beautiful city. Georgia is a beautiful state. Great place to be, okay? Place I've visited. In fact, my dad is out from that side of the country. But Atlanta is a second-tier city outside of Los Angeles, San Francisco, New York, and maybe parts of Florida. So Uber is going to give them the leverage and the network effect that they likely need inside of these second tier cities. Although this is just 65 square miles inside of the great city of Atlanta, but now you're going to be able to hail one of these Waymos. And I was in San Francisco over the weekend, and these things are freaking everywhere. We'll talk more about that when we get to Tesla. But first, we'll get to Microsoft. Start of the week at 475, up 4%. Finish the week at 495. We'll have to look at this one technically. Continues to move higher. Heated situation over at Microsoft as OpenAI is looking like it's trying to become one of the world's biggest companies. and they still have Microsoft as a lead investor. Lots of drama being played out, not a lot of it being reported. I'm trying to keep up with it as much as possible because depending on how this works out, it could derail OpenAI. It could also unleash the shackles, if you will, of Microsoft on this company. Sam Altman saying he had a, quote, super nice call with Microsoft's CEO earlier this week. This is as rumors as OpenAI wants to convert to a for-profit company. That is well known, but it needs Microsoft's approval in order to do that. And if you're Microsoft, do you really want to do that? Because the deal that Microsoft has is one of the greatest deals of all time. That is because they get intellectual property rights to OpenAI models until 2030, a leading AI company, which we've seen all these companies want to be. Microsoft gets exclusive to access to that, and they get 20% of revenue, not 20% of profit. 20% of revenue goes to Microsoft. That's a great deal. You get exclusive access to the best models and the best research talent, and you get 20% of the revenue. And if you're OpenAI, you can sit here and see why this deal could hold you back. Because if Microsoft's your only exclusive customer and you have to give them 20% of your revenue, that can hold you back as a company. OpenAI is rumored to be potentially reviewing a, quote, nuclear option, accusing Microsoft of anti-competitive behavior. And OpenAI is sitting on a $50 or a $30 billion commitment from SoftBank, and that will be cut to $10 billion if they don't work something out with Microsoft. So if you're Microsoft, you're sitting on a gold mine, and you obviously don't want to give it up. If you're OpenAI, you're also sitting on a gold mine, but that gold mine doesn't fully get unlocked unless Microsoft gets off. And so these two companies are going to have to work something out. And if they don't, that will become the benefit for Meta, for Google, Tesla, pretty much every one of these companies. So we'll keep very close eye on this. This, as a lot of attention is on AI infrastructure and the chips, and most of these companies are working on their own, what is called custom ASICs, or maybe a more friendly term, in-house chips. So instead of using Nvidia or merchant chip technology from AMD and others, you're working on your own proprietary designs. When you're first working on these things, you're going to face a lot of hurdles. You're going to not get the yield. You're not going to get things right. And at the same time, you're seeing Nvidia continue to keep their lead in these types of things. This is why Google has a competitive advantage, because their in-house AI chips are as good as what you see over at Nvidia and other companies. And this is why all these companies want to get to that level, because Nvidia is not going to cut their prices, and it's certainly hard to get access to their chips. Now, just because you have a setback over at Microsoft doesn't mean you push the whole project to the side. It just means that you got a lot more work to do. Now, its first manufactured-focused AI lab opening up in Wisconsin. This will become a very, very large business no matter what happens with the tariffs and all those types of things. There is an interest in bringing manufacturing, and certainly as you have AI and robotics start to converge, certainly if you get humanoid robots, there'll be a very big interest in what type of manufacturing can you do with these robots. And maybe you don't have to do it in Vietnam or China or any other country. Maybe you can do it here in the United States, and Microsoft opening up its first lab focused on that. We talked about it when we talked about Meta, the fact that OpenAI has some of their researchers leaving to other companies as the race for superintelligence and AI just continues to move higher. Now, OpenAI is not going to sit around and just watch Meta poach its employees. It's moving out and has hired the team from a company called Crossing Minds, which offers AI recommendations to e-commerce platforms, as all of these companies want to get in e-com because there's a lot of money to be made there. Moving on to Tesla. Start of the week at 332. Had a major pop of those Robotaxi unveil in Austin, Texas. Shares popped over $350 per share, but then slipped by about 2.75% to finish the week at 323. You had a limited launch of this Robotaxi. In fact, it was kind of a beta test, I think is probably a better term for it, as only certain types of influencers and media were given access to the app and the actual rides. There was a lot of publicity around this type of thing, and there was a lot of people either praising the Robotaxis, people pointing out, where the guy's hand was in the car, and if it stopped and it turned the wrong wrong way. This is very, very normal when new technology comes out. I remember when OpenAI came out and all these ChatGPT prompts and responses were going viral. People would ask ChatGPT and ChatGPT would hallucinate or say something stupid. And this still goes on today, but you see it way less. People talk about the hallucinations and the wrong errors way less as it relates to AI now than they did when it was new technology. And so people with these autonomous vehicles, particularly people that haven't gotten an Waymo, people that haven't spent a lot of time in San Francisco. I mean, San Francisco City is the heart of robotaxis. There are more there than anywhere in the world. And so I've spent a lot of time over the past year in the city of San Francisco, and it is completely normal to see a Waymo there. It's also completely normal to see a Waymo maybe doing something that it really shouldn't be doing. But is it safer than a human? Is the girl next to the Waymo texting her boyfriend and then drinking a latte? Yes. And so pick your poison as it relates to robotaxis and autonomous driving. Do you want a computer to occasionally make mistakes, or do you want a human that is texting and is worried about something and is distracted by a number of different things? I think over time, people are going to realize the technology is not perfect, just like AI, just like ChatGPT doesn't give you the right answer every single time. But is it good enough? Yeah, it is. And Tesla will be a big part of that. Now, a big problem for Tesla is the fact that they're continuing to see their market share shrink in the European Union as registrations drop 40% year over year, just 8,700 units. Tesla has a big problem in Europe. They need to figure something out here. I don't know if Elon Musk is the man. He's a great guy at building businesses, building brands. Is he an expert in rebuilding a brand? Because that is what Tesla needs in parts of here in the United States, but it looks like especially in Europe as well. I think they need influencers. I think they need celebrity. I think they need advertising. I think they need a campaign here for Tesla in Europe. And maybe some of this had to do with the fact that Tesla fired ahead of North America and Europe operations. This guy had been with the company since 2011 and in some cases referred to as Elon Musk's right-hand man or a fixer. I don't know what side this guy was on. Maybe he was telling Elon, hey, we need to rebuild our brand in Europe. And Elon Musk, who seems opposed to advertising, opposed to influencers, opposed to doing some of this stuff, maybe he was opposed to it. Maybe this guy wasn't moving fast enough. I don't know. All I know is that Tesla has a brand image problem. It is not something that is uncurable, though. Brands can be rebuilt. Brands oftentimes struggle, get on the wrong side of boycotts, get on the wrong side of political type of arguments. It is not insurmountable, but you have to play offense if you're a brand. You can't just sit there and not do anything. You have to now go and attach the brand to something else, whether it's the features of the car, whether it's the benefits of owning a Tesla, maybe it's the benefits of the environment, or you attach it to celebrity. You attach it to an influencer. You attach it to athletics like you are a Nike or something like that. They have to do that over at Tesla. Otherwise, these numbers will continue to lag and we'll get more Q2 delivery numbers later this week as the company announces this at the end of the month. Now, it's the end of the fundamental news segment. Now we kick things off with the technical segment. The S&P 500, I'm on a monthly view. I'll switch this to a daily view, hitting right up against all-time highs. In fact, I think we had an intraday all-time high in the S&P 500 as you've had this massive V-shaped recovery from the tariffs all the way back, I think in less than 90 days. This is one of the fastest V-shaped recoveries that we've seen really since the pandemic. When you get to all-time highs, not at all concerning to get rejected here. That is possible. Also powering up through the all-time highs with the S&P 500. Wouldn't it all be surprising? In fact, potentially as early as next week, come back and back test those highs. Could be an opportunity to buy. Meta, destined to take out its all-time highs up here, just I think maybe a little higher than this. This chart looks absolutely fantastic. You can take profits if you're somebody that was saving the money. Like if you had money in these stocks or the stock market and you're going to buy a house in the next year or whatever, these are areas where you can take profits. Now, if you're in a retirement account, forget about it. lose the password. Don't take profits at these levels. But if you need this money for something else, you want to go buy something nice. You want to buy something nice for your kids or your wife, or you're trying to buy a house, like I said, or you're trying to just buy something. These are the areas where you can take some profits. Now, Apple in a completely different position than the rest of these stocks, sitting at the bottom of a range. You're looking for this one to bounce, and if it does, boy, oh boy, look out above for Apple. This one, Amazon, looking like we're going to retest the areas up at 240 very, very soon. Netflix just, you got to like break your neck looking at this one, continuing to move higher. Rejections in Netflix, you know what to do. Nvidia finally broke out above the overhead resistance that had really been in place for over a year, or about a year now. When you break to new highs, not at all concerning to meet some resistance at some point and then come back and do a back test. Google, sitting in the middle of the channel, not the bottom of the channel like Apple, but actually the middle. This one looking like it wants to walk up and retest highs back up at 212. I believe we have a ruling in their antitrust case coming in within 30 days. My guess is this one will want to run to the top of the channel, as most people are probably optimistic about that ruling. Here's a great view of when you burst to all-time highs like Microsoft does, you tend to just have anti-gravity for a while. All-time highs were at 470. We've walked all the way up to close to 500. Back test in Microsoft could be your first area to buy. And then finally, Tesla is very similar to Google. It's just sitting right here in the middle of the channel. Can't decide if it wants to push higher. With Tesla, it's actually significantly higher. The swings in this one being a more volatile stock. And from a valuation perspective, on paper, very much overvalued. All-time highs would be back up at 540. A move lower should have support down here in the 240s. Folks, that was the FAANG Cycle Recap Show for Friday, June 27th. Hopefully you guys have a fun and safe weekend. Thank you all for signing up for the free newsletter. Links for that down below. We have crossed a major milestone for Equity Empire Premium subscribers. Thank you to all of you. You got a new recommendation that came out, I believe it was Thursday, and we should have a new small cap one and the trading service launching very soon. Links to all of that in the description below. Thank you for your support, and we'll see you again soon. Good luck with your investments.